Hi, everyone. Thank you so much for joining us today. I'm just going to briefly set the context for the last of our four-part event series, which is Demystifying Finance for Handmade Enterprises. Today, we'll be discussing the role of philanthropic capital, and we're joined by an amazing lineup of speakers. But before that, let me just tell you a little bit about 200 million artisans and the context of this research. We started out as a COVID response platform, but we've essentially pivoted to doing research and building evidence for the artisan sector and showcasing the potential it can have in terms of creating a new, green, more sustainable economy. As part of that, we're conducting research which has been commissioned by the C3 Consortium, which is the Catalytic Capital Consortium, which is the MacArthur Foundation, Rockefeller Foundation, and the Omidyar Network, which is investigating the investment needs of handmade enterprises in India. TSIC, which is the Social Investment Consultancy, is our research partner in this project, and Chiu is the managing director of TSIC. It's a social impact and consultancy with offices in UK, India, Hong Kong, and Ghana. TSIC has worked with close to 200 clients, including the Children's Investment Fund Foundation, British Council, and UNICEF. Bonnie has a strong track record in impact investing, such as advising on the setup of the Women in Safe Homes Fund with Big Society Capital, co-founding the Diversity Forum for Inclusive Social Investment. She also currently serves as an investment committee member of the 20 million Flexible Finance Fund at Access Foundation for Social Investment. Her background is in social entrepreneurship, and she has been recognized as a Forbes 30 under 30 social entrepreneur, and she will be leading the conversation today. We're also joined by Amit Garg, who's a principal at Kois Invest. He has over 10 years of experience in co-creating, managing, and informing catalytic grants from philanthropic and bilateral donors, focused on creating economic opportunities for disadvantaged and vulnerable communities. Prior to Kois, Amit managed corporate philanthropy for Godrej and Credit Suisse in India, South Asia grants for gfems.org, and strategy consulting for the Global Development Incubator in India. He specializes in co-designing development programming and innovative financing mechanisms in South Asia. Hi, Amit. Welcome also to Mallika Sridhar, who's the Regional Lead South Corporate Affairs for the Godrej Group. She's an experienced public policy professional, currently leading corporate affairs for Godrej Industries Limited and associated companies in the South, working closely with industry bodies, government stakeholders to further shape policy levers and advocacy for businesses. Previously, she has led the civic tech and climate tech innovations portfolio at Social Alpha, an impact-first investment platform enabled by Tata Trust, supporting viable business models to receive early-stage capital and incubation. At IFMR Lead, she was managing large-scale randomized control trials through stages of design, operation, stakeholder management, research, dissemination, and policy formulation. While at Ernst & Young, in their government and public sector practice, she has had a wide range of experience in policy, strategy advisory, and program monitoring for large-scale infrastructure projects. She's completed her master's degree in public policy from Lee Kuan Yew School of Public Policy, National University of Singapore, holds a bachelor's degree in engineering from Pune. She's also a Young India Fellow and has worked on research projects with the World Bank, Singapore, NUS, and INSEAD Singapore. I'm going to now hand it over to Bonnie to lead us in the conversation and tell us a little bit more about the theme for this webinar. Over to you, Bonnie. Thanks, everyone, for joining us again. And all of the people who've joined us, please put in your questions in the chat box and do introduce yourselves so we'll make sure that this is an interactive session. Thanks, everyone.
Thank you so much. Welcome everyone to the last of our four-part series, as Aparna just mentioned. The four-part series are really focused on how we can demystify finance for craft-based MSMEs. And we all know that there's so many challenges to accessing finance, but especially for the artisan industry. So we've been looking at different ways of accessing finance. We started off with traditional debt and equity, their limitations, and then we explored alternative finance. Then we heard firsthand from entrepreneurs themselves going through the fundraising journey. And last but not least, today we're focused on philanthropic capital. We're leaving philanthropic capital as the last because in a way it is the fund. really is the fundamental to enabling investment capital to be there in the first place. So, while we know that investment capital is really key, the role of grants and philanthropic capital really can't be ignored, especially to support early stage developments and to deepen social impact. So I'm really glad to be joined by Amit and Mallika, who have great experiences across the spectrum of capital, working on more commercial ends as well as more philanthropic ends, and with experiences also in the crafts sector. So we'll be exploring the role of philanthropic capital with respect to catalyzing more investments for the artisan industry. So my first question to both of you is really actually a personal one, because you've worked at so many different parts of the spectrum of capital that I just mentioned. Can you just tell us more about your career to date and your interactions with the craft sector specifically, so that we can understand more the perspectives you'll bring to us today? Amit, would you like to start?
Sure. By the way, congratulations on 30 under 30. My first thought was 30 is so far back. I'm like
I have to stop using that at some point because I'm approaching the end. So yeah.
But no, thank you for asking this question. So I've actually been very fortunate. I'm an engineer by vocation. Started my career in tech, US, India, IBM, those kind of people, and basically realized if I'm going to be making money for people, I should be making money for people who need the money and not the Citibanks of the world. That's the long and short of it. And so I took on the. I basically decided I want to work in kind of social impact. I didn't even know it was called social impact by then, but the idea was I wanted to do something with the UN. So I did a public policy master's. With that, I went and applied for a job at the UN. Honestly, even got it. It was pretty easy, but the challenge was immediately after that I realized that this is just a big giant show, and it's not really resulting in anything beyond lots of reports. So what that meant, fortunately, around the same time, the whole CSR law was being framed in the country, and as I was saying earlier, Godrej, being one of India's largest and oldest companies, wanted to hire people who were actually coming from the sector, who understood at least some nuance of what social impact could mean. Unlike most other organizations back then, which were trying to find who can double hat from a comms role to a CSR role, or who can double hat from an HR role to a CSR role. And so in that sense, I was very, very fortunate. I interviewed with the team and they took a chance with me. And frankly, it's been a very interesting journey since then. So I worked for about 4 years with Godrej, eventually moved to Credit Suisse, which looks at philanthropy from a very, very different lens, from an investment bank's lens. And we can talk about that later. Got into more kind of global development with an organization called the Global Fund to End Modern Slavery, which was actually financed by the US, UK, and Norwegian governments. It was about $100 million fund. And really my job was to find and deploy this money in aid of frontline organizations in India and in Bangladesh. Again, that is literally the first time I would have stepped into a apparel factory. And that is also trying to answer your second part. This was actually a fairly large apparel manufacturing unit in Dhaka, close to Dhaka, in Bangladesh. And that's when I kind of just saw firsthand how clothes get made, and which was a bit of an eye-opener. I did not do anything about it except for those small grants that we were able to make. Fortunately, the fund also allowed us to make grants to union-based organizations so that there is collective worker action which can potentially take place. And through that whole journey, I also participated with nonprofits who've been working with trying to ensure workers' rights for the longest time. So my approach to crafts has actually been very, very organic, and predominantly from the lens of the workers, or the craftsmen or women, in some sense. I also, just very short example. One of the earliest visits I'd done was to a village close to Gorakhpur in UP, which is tasked with making saris. Okay, so there's some sari thing there. The entirety of the village makes saris, like literally the entire village. So every single house has a machine, and the entire family actually works on that machine through the day. Your machine runs 24 hours, and the family in shifts is making saris. Unlike the neighboring village, this village actually has 100% power backup. So I actually saw for the first time how markets come together to actually bring electricity to those houses which are going to reward markets. So a whole bunch of eye-opening things happen, and that's where lastly, but certainly not the least, my wife is a fashion designer, and that also allowed me to look at this from a slightly different lens, which was that of waste. There's an extremely large amount of waste which commercial fashion generates, some of which we are now seeing play out on TV screens, especially because of COVID. So in that sense, that's been my journey so far. I hope I answered your questions, even in a long-winded kind of manner. Thanks, Bonnie.
Great, thank you. It's really great to hear your experiences working on philanthropy with different types of companies, and now at an impact investor. So kind of really would be great later on to hear more how you see philanthropic capital kind of come together with impact investing. And it's also, I think, really important to hear some of your personal experiences with the craft sector, because the craft sector, I guess this research that we're trying to do is to make that case for why the craft sector is worth investing in. And it's not often a sector that comes to people's mind. People think about education, financial, fintech, etc. And it really takes some perhaps personal experiences for you to then know actually there's a lot of potential in the craft sector, and for you to be that champion before we can make this mainstream. So thank you for sharing that. Yeah, Mallika, over to you.
Thank you, Bonnie, and thank you, Amit, for setting the discussion up. I think a lot of common threads there, and though Aparna has covered a great detailed introduction about my background, it's a lot similar to Amit. At least my motivations, and I'd love to sort of draw parallels to that. Similar to Amit, also an engineer by profession, worked for some time with, networks and, electronics and telecommunication, all of that, realized that that is not really creating the kind of impact that I want to see in the world. And just staggered onto a course in liberal arts and moved onto public policy. It sort of gave me a direction to really choose a profession where I could create impact. For a brief while, similar to Amit, I worked with the World Bank, took up a couple of consulting projects, and then took on a full-time role with Ernst & Young. And very similarly, though it was great learning to try and see how governments really shape policies and programs, but at a very early stage in my career, I did think that it was a very macro view, and I did not know what the end beneficiary really wanted. How is the policy going to impact the beneficiary? Is it really informed? Is it really designed to impact the target group? That was still very unclear, and that led me into a development research role with IFMR lead, where I realized that running sort of different forms of research on the ground can help you understand the problem statement more clearly. And I would say this because IFMR lead, while it works in microfinance, it also has certain sectors which they were targeting, and artisans community was one big sector that they were looking for to understand a little better in terms of what kind of finance works for them, what is the usual ticket size, how should microfinance companies lend out different loans to different target groups, and what would empower them, including, digital finance, because in 2018, when I joined IFMR, demonetization was announced, and that created a huge, sort of surge in, how, transactions were made. And I think this was the community which largely, not only suffered, but also, how did they become resilient through this entire shift towards the digital economy. And while I was in this space, I also realized that, while research has one aspect of, informing how policies are shaped, but, there is this other aspect of social entrepreneurship, which is extremely empowering in terms of, how intervention is more sustainable and, financially, viable, and how impact is more long-term because, it is revenue generating. And that is how I joined, Social Alpha. It's an initiative by Tata Trust, and largely it's an impact first fund which supports very early stage startups which have some demonstration of their business model, and really helping them with catalytic capital, which could be either in the form of grants where certain partnerships were made, and I will come to that later. But really looking at equity capital, early stage equity capital, to be able to really form their teams, validate their products on the ground. While when Social Alpha, I joined Social Alpha in its early journey, we were still developing a lot of theses, and it was really important when we started looking at sustainability that the artisan sector should not be left out, because livelihoods was a huge component of what we wanted to talk about while looking at agriculture. But then we also saw how the artisan sector not only plays into livelihoods, but also plays into climate action, sustainability, waste management. And these were the aspects that led us to a couple of early stage investments that we made into this sector. So really very similar journey to Amit. However, a little bit of a role reversal since he's now in COIS, and I've joined the Godrej group. The reason why I went back into sort of my core public policy function is also because while I was at Social Alpha, I realized one of the key markets to scale up social enterprises happens to be philanthropic capital, not only philanthropic capital, but also corporations and the commercial sector, which is really looking for new age innovations to not only be part of their supply chain, but also take them forward and scale them up before possibly the government looks at a huge large scale program. So this market linkage where a corporate comes in to really support a social enterprise to achieve some sort of scale, look at the next stage of pilots that they want to do, and possibly expand their market and consumer base, is what I thought needs to be informed by policy, but also where corporations are able to leverage government partnership to be able to take some of these market interventions forward. And this is where I feel policy has a lot of impact, along with, of course, a lot of the work that I've done in research, as well as working with social enterprises. This was one piece that I felt was so important, with a lot of new age corporates coming to really invest their time and philanthropic capital to scale some of these innovations forward. And that has largely been my journey. It's been very exciting, and I'm still very new to Godrej. So I hope through the public affairs team, as well as a lot of policy reformation, we are able to bring in a lot of sustainability initiatives into the organization.
Great. Well, thank you so much. Yeah, very similar journeys, but I also love how you talked about the artisan sector being key to livelihoods, climate action, and waste management, and some of the more perhaps traditional sectors that philanthropic institutions support. So my next question is taking a step back and looking at different philanthropic institutions, of course, in the context of India companies being quite a big part of that. But what kind of philanthropic institutions are currently supporting the craft sector, and what's their interest in the craft sector? And I think that would be really helpful, particularly for the audience, with quite a few, I think, craft entrepreneurs represented. So Mallika, would you like to start first and then pass to Amit?
Sure. Thank you so much, Bonnie. And possibly Amit can add in, a few more names, but they might be sort of similar across the sector. But I think some of the organizations which have taken a lead into supporting, craft-based supporting craft-based enterprises, definitely, H&M Foundation, they are looking at, really looking at not only, of course, sustainability and waste management is one part of it, but because, their supply chain is largely looking at, the apparel sector. They want to be able to make it more sustainable, reduce the waste on the shop floor. And that leads them to the entire, maybe not the handlooms and the craft sector, but really looking at how a lot of this, shop floor waste can be, reused in the craft and the handloom sector. So really sort of connecting the dots between these two and working with social enterprises that could, bring a revolution in the whole, fashion industry, something that H&M Foundation hopes to do. So like I said, they are open to, exploring handicrafts and handlooms, but only if, it, also aligns with a lot of their, business positioning in terms of how they want to go sustainable in the whole apparel industry. There's definitely, I think, a lot of interest from organizations like IKEA. I think IKEA Foundation is also starting to, very seriously look at the apparel sector, particularly innovations in the apparel sector. And like Amit mentioned, looking at the whole waste to value segment, because, they have a huge furnishing segment, again, which feeds into their supply chain as well. So this is where, possibly looking at working with the artisan community or working with, the craft sector to really, get all of this, apparel waste to, make more meaning back into the business and back into the supply chain. These are definitely two organizations that I could think of. I think there are a lot of other organizations that inform research and consulting through the sector, and really, working to understand the sector a little bit more deeper. And these definitely looking forward to, hearing as well to see if there are more organizations that, he has come across and worked with through his career.
Yeah, no, so I think you've covered pretty much all the folks that I know. So let me do this. I would maybe break this down into two groups. There is the corporate group, and then there is the more philanthropic group. And then within the corporate group, as you saw clearly, there are kind of retail or apparel companies who are keen. Some of them are keen to offset some targets. Some of them are keen to offset image issues. but there are those. There are corporate imperatives which are enabling some money, I would say, to flow into the craft sector. I still don't think it's nearly enough. Also, there's an interest there's an interest misalignment here, right? So what you actually want when you are trying to finance the craft sector is, for the lack of a better word, I would say something like slow fashion, right? Or an economic agreement which allows for equity to the workers as well, or the artisans as well, in some sense, right? So I don't want to get into how that would happen, but it surely means that more money should come into the hands of individual artisans, right? I don't think there is enough corporate interest in that. So there is corporate interest in offsetting, and there is corporate interest in supporting narratives, but I don't think it's actually resulting in money reaching into the hands of artisans. Which brings us to the next segment. The next segment is what I would say is folks who are in the philanthropic kind of ecosystem one way or the other. And within that, I feel that the division is basically into three types of donors. There are those donors who are interested in gender, and which is why they are looking at the crafts or the artisan space. Even though it's a little bit misinformed, because when we are saying artisans, we are not just saying all artisans are women, even though a majority of them are. So there is a gender piece there. Then there are folks who look at it from a rural development and a livelihoods lens, which has, I believe that is the largest chunk of money today. So at least in the India context. So the largest chunk of money I feel that goes into the craft space, it goes actually in the name of rural development or livelihood development. Of course, it goes towards supporting artisans and craft-based enterprises, but the framing is on rural development and livelihoods. And I feel the third one, maybe the most neglected one, is the micro enterprise kind of development model here, which is where you start treating craft-based companies actually as off-farm producer companies, or even in some case on-farm producer companies. And that, I believe, is the piece which actually requires some innovation on the financing side, because these are organizations who can be profit-making, who can certainly break even, and for the most part, if aligned with markets, are actually creating products which have value, which means that they will be making some money on the products that they are selling. There are some very, very simple, small examples of success here. I believe we all know an organization called Industry Foundation, which is trying to do this with a few value chains, including banana. Cois is also participating with them on another transaction where they are looking at setting up the value chains for bamboo. And as you mentioned, Mallika, the primary buyer for that produce is, or for those products, is something like an IKEA. And the reason IKEA is doing this is because IKEA also has global net zero targets and global targets that they want to meet. So there is certainly a role for industry, but there is, I would say there is a bigger role for investors to start looking at these craft units as micro, medium, nano enterprises, which are owned in some sense by artisans themselves, and are actually credit worthy. So they need access to working capital. Somebody should be able to provide them access to working capital, because there is a market that they're actually catering to. They are running businesses. Some of them are near profitable, some of them are profitable. And I believe with some access to capacity development, these organizations can actually become fairly interesting. I hope that answers your question.
Yeah.
I just wanted to add, Amit, that, very interesting perspective when you broke this down into those three segments. I think one of the newer segments that, a lot of the foundations are looking at is also climate action.
Yes.
Particularly organizations like Loudest Foundation, which, works largely to support, the apparel industry, sustainable fashion. And of course, within that entire gamut falls the entire handicrafts and handloom sector. So very interesting because, like you said, there's the MSME, micro enterprise, enablement, probably financial inclusion element, and rurals and livelihood, and, now looking at climate action. So definitely, I think, very well laid out in terms of, how both the kind of capital and the different kind of organizations work.
I think this is really helpful because a lot of entrepreneurs, when they look for grant capital, entrepreneurs working in the craft sector, they can't just Google foundations that support the craft sector, because it's, no foundation really identifies themselves that way, but it's searching other keywords like rural development, women's empowerment, livelihoods. That's probably how entrepreneurs can potentially find funders for their work. And I think that turns to my other question as well, because we have so many entrepreneurs in the audience. A lot of them turn to grants. I mean, some of them might be running NGOs, so the viable option would be to get grant capital. And in the chat, a few people have mentioned that they do run NGOs. But others who are running enterprises may turn to grants because they need it for product development or pilots, etc. And also because grants is perceived as free money compared to more expensive options like debt and equity. So I just wonder, in your experience, what would be your advice to these entrepreneurs? When should they be looking for grant capital, and how can they maximize their chance of success?
The question is for Mallika.
Well,
Yes,
for both, up to you.
Yeah, I mean, in fact, very interesting, because in my experience, when when we worked with Social Alpha, when I was working in Social Alpha, and talking about what is the right point when entrepreneurs should be raising equity investment, is actually once they do have proof of concept and a business model that is sort of validated on the ground. The reason why we also support this is how they do not want to dilute too early in terms of not knowing how their business is going to shape out. So really, from an early stage investor, and it is a really tricky situation, Bonnie, like you mentioned, this is a sector which is not very well funded as well, in terms of, there are not a lot of commercial investors in this space, but at the same time, there is availability of grant capital, but at the same time, one needs to be very clear about what are the keywords that should be looked at while you're applying for that grant. And grant capital at a very early stage helps you validate your business model on the ground, and it really tells you that this could work or this could not work. And while this is still a risk for a lot of corporates and CSRs at this point of time, it is still one of the sort of go-to financial mechanisms that is advocated by early stage impact funds like Social Alpha, because it really tells you whether your business model works or doesn't work, and how it can scale. And that is the point where you can actually raise an equity investment, even if it is a small one. So yes, I think we have largely supported early stage grants, and early stage grants support also comes from government quite a bit. So a lot of government grants is what we have advocated in this very early stage, where if you're working with tech innovations, or you're working with deep science innovations, particularly you're looking at probably bioplastics, or you're looking at sustainable fabric, a waste to value product. So at this point of time, if you have deep science innovation, there are a lot of grants that are available by different government departments, primarily Department of Science and Technology, BIRAC. A lot of them have these early stage grants that innovators can really apply for. At an R&D stage, this really supports them. The second line of grant is usually working with incubators. And when I say incubators, this largely are incubators supported by by government intervention. So for example, NITI Aayog has set up a lot of incubators across the country, which are also housed within different colleges. They sort of support innovation. They support innovation that is coming in-house. They support innovation innovators who apply to them. These are also sort of great platforms to sort of be a part of cohort where you get a small grant that you can really, take forward to establish, your business model. I would say the third line of, sort of initial grants that you could access is through possibly research grants, and research grants are becoming extremely innovative in nature now. Why I would say that, because I have seen this in my experience with IFMR Lead. IFMR Lead actually went on to work with USA to set up Catalyst, this particular incubator, which actually housed 4 or 5 early stage fintech startups, digital fintech startups, in a sandbox model, where they largely saw how they were impacting the target beneficiary or the last mile. And while this was in a different sector, particularly looking at small and medium business owners, I think this model can be very well supported in a possible handlooms and handicraft sectors. You really sort of replicate this model because a lot of researchers are very interested to know very different aspects of how maybe financial inclusion is supporting this community, whether the products reach scale, whether the business model becomes more sustainable. And this research grants, if they can be deployed in this innovative model, you really can have a very sandbox model for certain startups to really validate their business model. So I've really seen some of these 3 very early stage grant that enterprises can access. And of course, once that is sort of validated on the ground, early stage incubators and investors can step in, like Social Alpha, and further on supported by corporate CSR, which is really looking at scaling up some of these enterprises and their solutions. Over to you, Amit.
Great, thank you. And Amit, before you answer, perhaps you can also address that point that Rennie put in the chat, just the hesitation that some social enterprises have around taking up grants because of the paperwork. So yeah, any advice to entrepreneurs around taking up grants more broadly, including addressing this point on bureaucracy?
Yeah, so unfortunately, what I've seen over the years is the paperwork is almost directly proportional to the size of the grant or the check being written. So, in fact, to give you an example, the $100 million commitment for the Global Fund to End Modern Slavery actually used to produce a report which used to be tabled at the US Senate. So I don't think there is any way around paperwork. But I will say this, that so I have seen social enterprises take to CSR and grants in very, very creative ways. And we can talk about that a little bit more, but the simplest example would be, as opposed to asking for a grant to develop your product, right? The simplest money you can ask from a CSR donor or even other philanthropic donors is to actually deploy your product on the ground. So there's a social enterprise, for example, that actually Will Grow was incubating. I remember, if I remember correctly, which is to simply make video-based vocational training programs, so like 20-minute videos on YouTube, and they basically needed money to ensure that these videos reach a wider audience. Right now, it totally depends on how you write this grant proposal. So how they wrote the grant proposal, which worked, is they said, we are currently only reaching Hindi-speaking audience. So I now want to go and reach out to Urdu-speaking audience, Bengali-speaking audience, Kannada-speaking audience, Gujarati. And what they had, which was interesting for us, they had statistics which actually showed that their videos are actually being opened and viewed in Pakistan, in Bangladesh, in Gujarat, but they feel that because of the fact that there is a language difference, some of the comment sections were basically talking about translation. So it was a very simple grant which was executed in less than a week. All it did was went to Will Grow, who was the incubator. Will Grow basically paid money to a social enterprise to put subtitles. That's it. It was a very, very simple way to present a rather complex problem. to a donor who did not have the appetite to go through the entire process of like figuring out how to support a social enterprise. And that actually comes back to Mallika's point of the role of incubators, right? So the other lens to look at this, and I'll go back to incubators in a bit. The other lens to look at here is that the way philanthropy and CSR, especially in the India context, has run is also very different now than what it was, let's say, 4 or 5 years ago, right? And 4 or 5 years ago, if you had asked me this question, I would have said that CSR and philanthropy has the highest risk appetite and should only be funding innovations and should only be doing the craziest possible things. And at another time, I can tell you some of the crazy things that we did. But now, the regulatory environment that we are in, CSR is probably the lowest risk appetite. CSR wants to do, and philanthropy also. I mean, you probably all read what happened to Amit in the morning. So the whole philanthropy ecosystem is under a huge amount of spotlight, whether it's CSR or philanthropy. And what that means is their risk appetite is already very low, and I don't see that risk appetite increasing over the next few years. The biggest writers of checks in India are going to want to now write even bigger, safer checks. So smaller nonprofits don't stand a chance if they want to go and raise a 10 lakh rupee or a 40 lakh rupee or a 20 lakh rupee, because the cost of transaction is going to be higher than the transaction value itself. So if you go and ask for somebody to write you a 10 to 20 to 30 lakh rupee check, the organization which wants to give you this money actually willingly wants to give you this money. When they hire a consultant to actually do the due diligence on you, that cost is actually going to be higher or near about the value of the check that you want to write. Which means that what is now going to happen is, and that's actually why you see folks like Nudge making big incubation announcements. Folks like Unlimited India trying to do the same. Wilgrow has been doing the same for the longest possible time. Also, Social Alpha. I mean, there's a huge gap that folks like these are playing, because what they're now able to do is they go to a donor and they say, instead of writing $100,000 checks, you write me a $1 million check, and I will make sure that I can then get 10 really good small organizations to take this money, right? So I guess my logical conclusion here is to say that evolve with the times. And what the times are now calling for is to be a little smarter about how you ask for money. In some cases, it's actually better to ask for money as a consortium, as opposed to going at it on your own. Especially if you desire a larger check size, especially if you desire a larger brand to come through with their grant for you. Indian companies, including Godrej, have been around for 120 years or 140 years, and will stay for more than 100 years. These are the guys who are actually, in theory, the highest risk appetite folks. So go and write to Mallika and ask for funds from her. But more seriously, what I would do is I would actually band together with 4 or 5 or even maybe 10 organizations and send this proposal together, because what it does is you're no longer asking for 10 small checks, you're asking for 1 large check. Lawyers will be happy, auditors will be happy. This transaction becomes easier. And Renee, to your point, I don't think paperwork should be a deterrence. I think the deterrence here should be whose money you want to accept, right? So there are enough and many people who are willing to write checks. It's just a question of whether you want to be able to hold your own fort while talking to these guys, or whether you want to respond to what their requirements are. Most donors I've seen have also gone through a bit of a change post-COVID. So pre-COVID, there used to be a lot of emphasis on sort of managing money well. Now I feel donors are a little bit more empathetic to the causes that they are giving money to, are willing to listen maybe a little bit more than what they were before. and are hopefully not going to make you do additional paperwork than what they have already asked you to do, which would be a good place to start with. Bonnie.
Great, that's very, very helpful. I wonder, Mallika, if you have any point you want to respond around, is it better if actually enterprises team up with others to seek funding from an organizations like yours?
Yes, I absolutely agree to what Amit said. In fact, he sort of beautifully put that across. In terms of how even CSR and corporates are now looking at deploying funds. There's definitely more comfort in designing a program which has a large scale impact in terms of, say, looking at supporting 10 organizations versus one organization, and looking at those 10 organizations really creating an impact nationally. So the kind of visibility that also has in terms of the impact, but also in terms of the real impact on the ground, because then you clearly know how your money is being deployed on the ground. In this case, of course, what I have largely seen CSRs, corporates warming up to the kind of idea is to work with incubators like Will Grow and Social Alpha, because really to identify, these enterprises has been a challenge, for them. It's a new sector for them. The huge shift from really, deploying their capital to, say, build schools or, do some health intervention in a particular state or, in a village. From moving to that, from that to really understanding how enterprises work largely. I think we at Social Alpha, that model of deploying equity capital was substantiated with grant capital, because we saw a lot of value in it. We saw that say if we take a cohort of 10 startups to say Tata Power, where Tata Power wants to work in a craft cluster in Jharkhand, they would largely want to develop micro enterprises, and they are looking at a huge impact that they want to create. And like Amit said, there is no really dearth in terms of the ticket size. It's about the right enterprises, and they want to work with organizations who can identify those right enterprises. And that is where the expertise of these incubators come in place, where they really go through a sort of detailed evaluation process of identifying impactful startups based on their thesis, based on aligning with the CSR's goals and what their mission is. So I think it is about the like-minded organizations to come in place. Of course, when you look at individual enterprises, I think I would rather encourage that people look out for a lot of incubators that announce these huge programs. And like I also see Priya has put out the link for catalyst.org. This is the incubator which just ran 2 years ago, a craft-based sort of cohort supporting craft-based innovations. And very recently, even IIM Ahmedabad, their incubator has been looking at CII. They have been looking at getting these craft-based enterprises together to create market access with corporates. And when you see that line of market access, this line of market access is not particularly for doing the work that these enterprises do, but largely looking at say things like corporate gifting. Okay, so corporate gifting is one aspect of intervention that corporates can pick up, where they are looking for really innovative handmade, sustainable products to give their external stakeholders, internal stakeholders, and this is a great sort of market linkage for some of these startups. And that could also happen in a cohort-based format, really introducing them to a host of your corporate partners, and see how some of these get picked up and scaled. So yeah, I can think of some of these things, but these are really innovative ways in which different organizations are trying bring the whole ecosystem together. At the end of the day, it's about, working together and, fitting sort of the pieces of the puzzles together. So I think that's what, all of us are doing here. So, yeah.
Great. Well, thank you. I think that's been really helpful conversation from a philanthropic capital perspective, where entrepreneurs should be looking for support, and rather than looking for CSR funding, it seems actually getting into the corporate supply chains is a much better way for a lot of these enterprises in the 200 million artisans network. So Priya, you've turned your camera on, so would you like to say anything? We still can't hear you, even though your background looks a bit different now that you're not on the street anymore. Yeah, well, type in the chat.
Priya, we can't hear you.
Can you hear me now?
Yes, but there's a lot of background noise.
Aparna, take over, but I do want to say that Mini Chopra from ICA, who has just taken over ICA, is on the call. And if you'd like to say anything at all, I'd love to invite you to say, how ICA has been working, supporting craft entrepreneurs, and also, I know you gave some grant funding to people, especially craft entrepreneurs. So if you'd like to say anything, I'd love to invite you. But if you don't, no pressure.
Hi, Priya. Thanks for giving me this opportunity. So I hope everyone can hear me.
Yes,
we can hear you, Minu.
Yeah. So I totally agree with what is being discussed right now, that it always makes more sense to go to these funders or incubators as a support. And this is what we've been doing at ICA also. That we've been associated with groups, artisanal groups. We are understanding their needs, and then we are clubbing together various organizations and going to purchase, and have been raising funding through them and passing them on to these implementing partners who could then roll out their projects on the ground. So this model has been pretty much working. And on the other hand, what ICA has also been doing is that we've been approached, because we are an umbrella organization and we have a lot of craftsmen members under our umbrella. So we also make profile these members, sort of try to enhance their visibility and also create catalogs with their product ranges, with which we approach a lot of buyers, and these are both national and international buyers. We approach corporates for corporate gifting and things like that. So that model has really worked. One, it has been very beneficial for the smaller groups who are not in that position to reach out to these corporates or big organizations and pitching their products, and also being very beneficial for organizations who don't have an export license. So that way we are facilitating even international markets for them. So this is the model that ICA has been following, and going ahead also we wish to work in partnership with a lot of implementing partners also, and a lot of other organizations, so that we can form an ecosystem and approach big buyers, big funders together. And approaching incubators is also up on the card, and we would want to do that. And we also had initiated these award property called Shelf Udyam Samman a couple of years back, and now we wish to take it ahead and also get associated with an incubator where we could incubate the models further. So those are the things that we've been trying, and this model has been successful, and I totally agree with what my other guests have been talking about. So
great, thank you.
Thank you.
Great, thank you so much. Yeah, really great for you, for us to hear about your work, and yeah, I guess entrepreneurs can look further on your website to see how they can get support from organizations like yours. We're running out of time, so I just want to thank our great speakers, Amit and Mallika. Yeah, a lot more to talk about. And I think Amit personally, I would love to pick up on that conversation about risk capital. I mean, where should we find the risk capital across the spectrum of capital to really fund the next innovation in the craft sector? But perhaps we'll pick that up as part of our research, which you have both supported through interviewing with us. So I'll pass it to Aparna from 200 Million just to wrap us all up. But thank you once again for a great conversation.
Thank you so much, Bonnie. Thank you, Amit, Mallika. This has been a fascinating conversation. Really appreciate your inputs, your insights, and advice to the entrepreneurs who joined us. Thank you to everyone who joined us. I would like to just request you to participate in our survey. Like I said earlier, we are currently mapping the funding needs of craft-based businesses in India. As part of that, we've designed a first of its kind historical survey that's going out to 500 plus handmade enterprises working in India's artisan economy. I'm just going to drop the link to the survey in the chat group. Would really appreciate all of you participating and giving us your thoughts and inputs on what are the kinds of challenges you're facing when you're accessing finance for your businesses. This is also accessible on our website. You can go to the 200M website and take the survey from there as well. This research will come out as Business of Handmade 2022 in November of this year. For those of you who are not familiar with our first research, Business of Handmade 2021, which focused on informality, I've dropped the link in the chat as well, so you can take a look at what we did the first time around. This time we're focusing more on understanding what kind of investment, what are the challenges and barriers to accessing finance, and how can we overcome that. And the Demystifying Finance series has been a part of that as well. The recordings of this series will be made available, on our YouTube channel. So please follow us on our social media platforms to know when it's going to be up. And you can write to us. Apologies, there's some motorbike who's thinking he's a hero. I'm just going to drop the email as well, so you can just write into us if you want to figure out how you want to partner with us as well. Thank you everyone for joining. This has been a great conversation. Thanks Bonnie, thanks Amit, thanks Mallika. Hopefully this is the first of very many event series that we can do in the future.
Thank you everyone.
Thanks everyone.
Thank you so much.
Thank you everyone. Thanks for having us
See you
over.
soon.
And good luck with the survey and the program. Thank you.